We'll be moving on to the next keynote now this morning, our second keynote. We'll be welcoming onto the stage Ghassan Albohtori, financial market analyst at STARTRADER. His topic today will be about the US dollar and the rising role of gold in FX portfolios. Ghassan analyzes currency and commodity markets at STARTRADER. With a focus on gold's diversification benefits, he provides data-driven insights into portfolio resilience amid global economic shifts and US dollar volatility. Please welcome onto the stage Ghassan.
Thank you so much. Very kind. Thank you. Sorry, can I get the clicker? Thank you. Good morning, everyone. Thank you so much for taking the time to attend this presentation. My name is Ghassan Albohtori. I'm the market analyst for STARTRADER. And today I want to talk about a topic that's been really affecting the market in a big way recently. And that is the depreciation of the US dollar and how it affects the market. But before I get to the details, a question that might come to mind is, why should I care? Like, why should I, you, or anyone else care about the decline of the US dollar or the change in US monetary policy? How does it affect our lives? So instead of just showing you boring charts and numbers, I want to share with you three real stories from my personal experience that took place in the past few weeks. So the first one involves my brother. So early in September, my brother called me and he says, Ghassan, what's going on with gold prices? It keeps going up, it's not slowing down, should I buy or what? I explained to him very briefly how a decline in the US dollar is fueling much of the trend in gold and how the changes in US monetary policy are also affecting the price of different commodities. He said, okay, I will keep an eye on it and see what will happen. A few days later, he calls me again. And this time he asks me, he says, what is this Federal Reserve and who is this Jerome Powell? Jerome Powell, by the way, is the Fed chair, the chairman of the Federal Reserve. Now, I gotta be honest with you, I was very happy when he asked me this because my brother is a medical doctor and he never showed any interest in the financial markets. So it seemed like we're speaking the same language this time. And for once, he's the one asking me. I'm not, because I usually ask him about medical questions. So I tried to explain to him that, look, the Federal Reserve is the central bank in the US, and Jerome Powell is the president of the central bank. He's the one responsible, along with other members, responsible for setting the monetary policy, mainly interest rates. And when you cut interest rates, demand on the US dollar usually declines. So there's a direct correlation between interest rates and the value of the US dollar. When the Federal Reserve cuts interest rate, the dollar goes down, and as a consequence, everything that is priced in US dollar, like gold, usually goes up. It's not 100% correlation, but this is generally speaking what happens. So I explained to him all of the details, and I told him that in 2 weeks from now, that was in early September, I think it was like in the first week of September, so I told him in 2 weeks from now, the Federal Reserve will cut interest rates by 25 basis points. And as a consequence, the US dollar will probably decline and gold will go up. And then he asked me, but they haven't cut rates yet. We're still in the first week, they will cut rates in 2 weeks from now. So why gold went up already? So I also explained to him another aspect of the financial markets, which is markets are forward-looking. Investors respond based on expectations, not actual events that's happening right now. So when you expect that gold prices will go up like 3 months from now, will you wait until all gold prices go up and buy, or will you buy now? So this is what investors usually do. So I told him that for the remainder of this year, we're probably going to see more rate cuts, and gold prices are, generally speaking, are going to rise. Now, this is all theoretical, so let me just show you the charts now. This is the chart, the correlation, the inverse correlation between the US dollar in blue and gold prices in green. Now, again, this is not 100% inverse correlation. There are exceptions to this rule, but this is generally speaking what happened. Since the beginning of this year, the US dollar has been declining. Gold prices, along with silver, also other metals, have been going up. So this is story number one. Now, what's the lesson? Why I'm sharing with you this story? Had my brother known about the dynamics of gold prices, the US dollar, and monetary policy, I think he would have made better decisions with his investment. Maybe he would have been able to get into gold way, way sooner. So the lesson is knowing about economics, the financial markets, is not something exclusive for active investors. Even if you're someone who's just want to save money, for example, it's imperative that you keep an eye on the developments in the financial markets. So this is the first story. The second story involves a friend of mine who is based in the US. She was thinking of buying a new car and getting a loan for it. She has some background in economics, so we discussed this a little bit. And I told her, how urgent is this purchase? Is it very necessary? And she said, no, not really. And I told her, look, the Federal Reserve will cut interest rates probably 2 or 3 times this year, which means that borrowing will become less expensive. It's going to be easier for you to borrow money like 6 months from now. It'll cost you less because interest rate, if you go now to your bank and you want to get a loan, they will charge you perhaps, let's say, for example, like 5% interest rate. But if the Federal Reserve cuts interest rate, they will charge you 3%. So borrowing will become less expensive for you. So I told her to wait it out just for a few months and see what will happen. And soon enough, the Federal Reserve did, in fact, cut interest rates by 25 basis points, which means that her loan will become now cheaper. And going into 2026, it'll probably get even cheaper. So lesson number 2, knowing about the Fed policy, the changes in interest rates, and this doesn't only apply to the US, by the way. It applies in every country, every economy, like it can apply to the Eurozone, to the UK, everywhere. But I'm just giving the example of the US dollar because it's the number 1 traded currency in the world. So lesson number 2 is knowing about the markets will help you save money on your purchases. Now, let's move to the chart again. Now, what you're looking at here is the correlation between interest rates and the value of the US dollar. The US dollar is the chart of the US dollar is in the candlesticks for those who are expert in trading. And the red line, this is the Fed funds rate. So this is the interest rate set by the Federal Reserve. And as you can see, there's a positive correlation between the two. And again, nothing's 100% certain all of the time, just like a general direction. So there's a general correlation, a positive correlation this time, between interest rates and the US dollar, between interest rates and actually the value of any currency. You can apply it to the euro, to the sterling pound, anything. But what we're looking at right now is how the US dollar moves with the federal funds rate. When they raise the interest rate from the Fed, the US dollar appreciates in value, and vice versa. When they cut interest rates, the US dollar declines in value. So this is the story number 2. Now, let's move to story number 3, which is the most interesting one in my opinion. So a friend of mine was asking me about investing in NVIDIA. That was like, I think, 2 months ago. He said, what's going on with NVIDIA? The company keeps breaking new highs. It's now $4 trillion, the highest valuation in the world. And by the way, it's now $4.5 trillion, so it continues to go up. Now, look, also, I have to be clear about something. There's a lot of factors that affect the stock prices, not just interest rates. The company financials, the sector itself, regulations, seasonality, a lot of things play a role in the valuation of stock prices. But for the limited time that we have, we're going to focus only on the effect of interest rates. So I told him, look, again, the Federal Reserve is expected to cut interest rates 2 or 3 times this year, probably even more going into 2026. And the US dollar, as a consequence, will decline in value. So anything that is priced in US dollar, given that all of the other factors remain the same, will probably appreciate in value. And this applies to the NVIDIA stocks, S&P 500, and all the US indices. And in fact, NVIDIA stocks continue to break new highs along with other companies. So again, let me show you the chart. This chart shows the inverse correlation, again, between the US dollar and NVIDIA stock. And again, I have to point out that this is not a perfect correlation. Nothing in the financial markets is like kind of like physics or math. There are exceptions to every rule because human psychology plays a big role in how assets are priced. But if you look at this chart, I think you can clearly see the inverse correlation that when the US dollar goes down, stock prices, in this case NVIDIA, the S&P 500 goes up. S&P 500 is the US index that measures 500 of the biggest companies in the United States. So we consider it as like a threshold for the performance of US stocks. So again, you can see from this chart, there's an inverse correlation between the US dollar and the S&P 500. The same thing applies on the NASDAQ, Dow Jones, and everything else. So lesson number 3 from this story, again, it's almost the same thing. Knowing about the financial markets, knowing about the development from central banks, whether the Federal Reserve or the ECB, the European Central Bank, or any other bank, is important to make better investment decisions. And this is mainly the reason or the point I would like to make in this presentation, is that knowing about the financial markets is not exclusive for active investors. Even if you're not looking to invest or trade long-term, short-term, every day, but knowing about monetary policy changes, knowing about the US dollar dynamics, other currencies, is really important for you to make better financial decisions. So, where are we now and what to expect going forward in 2025 and 2026? The US dollar has so far lost more than 11% since the beginning of this year. There's a number of reasons why this happened. Let me share with you the most important ones. The first one is the tariff drama by Trump, which led, as a consequence, to a growing distrust in the US economy. And I'm sure many of you have heard that Moody's lowered the credit scoring of the US, I think in May of this year. So the distrust in the US economy, the tariff uncertainty going back and forth, and more recently the monetary policy changes by the Fed. Since the 22nd of August, when Fed Chair Jerome Powell hinted at seeing rate cuts this year, the US dollar continued to decline. Gold prices went up more than $500 since the 22nd of August. So this is where we are now. Okay, what do we expect for the remainder of this year and for 2026? So we have 2 more meetings for the Federal Reserve in which they will decide on the interest rates. That will be in October and in December. And there's a growing expectations now that we will see 2 more rate cuts by 25 basis points each. There's a still chance that we would see maybe 50 basis points and then another 25 basis points. I know this is bony numbers, but just link it with what this means. Just remember the decisions by my brother. Remember the decisions by my friend, how they're affected by these numbers. So yes, I know these are boring numbers, and they don't have, they don't connect with us because there's no soul behind these numbers. But when we link it with stories, with real life stories, I think we can see how important they are. So we're going to see probably 2 more rate cuts in 2025, maybe even a 3rd cut in 2026, unless inflation numbers go back up again in the US. The inflation is now 2.9%, depending on which measure you will take, but PCE inflation is 2.9%. If it continues to go up, we will probably see more rate cuts. I want to leave you with this, this summary. It's critical to take good care of our health, body and mind, but I think it's no less important to take good care of our financial health. And the first step to do that is to be informed about the market, read about it, and learn economics. The second step is to visit our booth, number 47, if you have any further questions. Thank you so much for your time and attention.